Hey everyone, this is Robert Keens with goldsilverpros.com. And today I'm going to profile a mining company, which in 2 to 3 months may be producing gold. They're very close. And that is really the sweet spot for the gold miners. You want to find the miners who are just about at production or about to make a mine decision, or they're going to get that bump when they start producing and making money. I'll go ahead and get to the presentation on this one. It is Winston Gold Corp. They're mining in Friendly, Montana, very friendly jurisdiction for mines here in the United States. They're trading on the Canadian Stock Exchange under the symbol WGC. And here in the US, if you don't have access to the Canadian exchanges, you can find them on the OTCs at WGMCF. One of the most exciting things about this company is that it's run by former Newmont Executive, the Chair and Safety of Sustainability Committee, Joseph Carrabba, who's now the executive chairman of this company and the #1 shareholder. In fact, he quit his job at Newmont, a major mining organization, to come head this and become its largest shareholder because he believes in the project. That's a really good sign when you have that quality of person with that history and that type of company coming to take over this smaller mining outfit and get it running. There's some key facts about this project I want you to know. It's a high-grade, narrow vein gold project, meaning when they mine the gold, they're not looking at huge veins. They're looking at smaller veins, but they're very high grade. So what they have to do is drill very carefully, and then they have to estimate where the gold is, and then they have to go and get it. This is not unlike a silver miner that I have profiled many times and went to see the mine earlier this year, Impact Silver, which mines in the historic Zacualpan district in Mexico, where they have the high grade thin vein mining down there as well. This can be done very profitably by companies that know how to mine and have done this before. The only drawback is they don't get a 43-101 resource estimate, so it's hard for the market to put a value on it, but that's also a benefit because they come cheaply priced. And when they start producing gold, their price, or silver in the case of Impact, the price tends to rise quite a bit. That's why I'm so high on this, is because I think it's a deep value company that's not trading anywhere near where it should be at the moment. They have resurrected a nearby mill that had previously been processing nearby gold from nearby mines, and they have that just about ready to run, and that's why they may only be 2 to 3 months away from production. I want to give you a little bit of rundown on where they're mining. It's not too far from Helena in Montana. It's called the Winston Project. It's about 37 kilometers southeast of Helena, Montana, and it holds a high-grade Custer vein in their mine. There's no modern drilling on this mesothermal vein system, but the historic reports indicate that 1.5 ounce per ton gold ore was being produced when the mine was last closed. So there has been historic production here. It used to cost only about $30 an ounce to get the gold out of the ground, and now they're coming back to mine it where gold is trading at about $1,900 an ounce. They have a fast track development strategy. Once underground infrastructure is in place, a bulk sample will be mined, milled, and gold recovered to determine grade and the best recovery methods. They also have a lot of existing rock that can be run through the mill right now to get some quick and easy cash to get them up and running, but they're also fully financed. Some of the advantages of doing this type of approach versus being an exploration company and looking for a big deposit, when you have an existing deposit and all you have to do is come back to it because the gold price has risen so much since the last time it was mined, and you have a nearby mill, all you basically have to do is get that mill up and running and start processing the rock and mining that gold. And that's one of the advantages of this type of deal versus investing in an exploration company and waiting 2 to 3 to 4 to 5 years for them to finally make a mine decision, build that mine, spend $100 million on the mine, and start producing and making money. So definitely a lot of pros to taking this approach and going to an existing mine. Over the past few years, Winston also acquired $700,000 worth of mining equipment, as you can see here in this bullet point, now valued over $3 million. So they were collecting mining equipment on the cheap, basically to get this up and running. So everything they've done has been the value approach, and they're going to start producing here in the next 2 to 3 months. Here you can see the vein that they have. Here's the Custer vein, which is the high-grade vein that they're going after. Now, when you do a narrow vein mine, basically you have to stay really close to that vein, and what you don't want to do is take up a lot of the ground rock around it because you get too much waste rock. So you really have to follow that along. But once you find that vein, you just follow along and keep mining that vein until you reach the next branch off or wherever that vein is going. And what they'll continue to do more than likely, like Impact Silver has done down in Mexico, is to continue to drill precipitously around that vein to see where it's going so they can continue to mine that rock. Here you can see some of the vein plan maps, and this is the Custer vein specifically. You can see some of the gold ounces per ton that they're getting here in the Custer vein. You can see that they're getting 0.55 ounces on W1720 hole. They're getting 0.47 here. There's definitely gold in those veins, and there's additional strike here for them to extend out further in this one vein. They have multiple veins here at the property. They have the Edna West vein, which has got some really good readings, 2.08 gold ounces per ton, 1.3, 0.303, 0.69. So there's definitely a lot of gold there that they're getting in their Joe results. Here's their project, their path to success, sorry, for the project. They've got the different veins here, when they're going to start test mining, when they're going to start producing. And again, we think in 2 to 3 months, they're going to be producing their very first gold. They're leasing the Paradigm Mill in Radersburg, Montana. It's just 35 miles away from the Winston Gold project. The mill has a capacity of 150 tons per day. It's a ball milling circuit, which is very standard in these types of operations, and it can be easily upgraded and is a zero discharge facility with respect to water. So there's not a lot of environmental concerns there, and they're about a month or two away from getting that up and running. The cost estimates are about 1.5 million to get the decline, get the muck base across cuts and all of that, about $149 per ton in mining, $8 per ton in transportation. Their G&A is about $200,000 and exploration development costs $300,000 for a total of about per ounce mined, $850 an ounce. Now gold is trading at about $1,000 an ounce or so above that. So it's more than 100% profit on every ounce of gold that they mine. This is a very, very profitable mine. And again, this is a way for you to make money because they're going to start mining pretty soon. They're going to start producing money. People are going to notice that share price really is going to go up. I wanted to take you over to the announcement they made with regards to producing their first ounces of gold as a Paradigm Mill nears completion. They released this on October 6th, just a few days ago. And they're talking here about how only having 40 days of rehabilitation work and getting the mine almost complete and ready to go. Again, they're trading on the Canadian Stock Exchange under WGC. You can see they've had a nice little bump since making that announcement. And over here on the OTC markets in the US, you can invest in them through WGMCF. Definitely not afraid to invest in these smaller companies that are near-term production. They're definitely good values. There are some risk factors there. There is some dilution factor. They really do have to follow the vein closely. But again, as we've seen with Impact Silver down in Mexico, it can be done. It's been done historically for decades. No reason to think that they can't do it. Here's a little bit on their shares outstanding. They do have some dilution there. But again, that doesn't really matter when you're getting in because it's where the price is going to go per share. And we expect the price to continue to go up as they get really close to mining. I think this could be a potential nice, really find for you guys here in the near term as they start producing gold, because you're going to see that bump up in share price. So a good investment opportunity. They have some really good people, including former executive from Newmont. They have experienced mine people from a previous company, RX Exploration, which did a previous gold mine here in the US as well. So it's a really good management team, a good project. Again, they've already got their permits to start mining. There's an exemption in Montana law for them to do their underground mining in the area that they're going to disturb, where they don't have to apply for additional permits. So there's not any permit concerns, no current environmental concerns. Doesn't look like in the near term anything is going to stop them from producing the gold. And it looks like they're going to start getting some cash flow from this project very soon. Again, this is Winston Gold Corp, Canadian Stock Exchange, WGC, on the OTCs here in the US at WGMCF. For those of you that have Schwab accounts or E-Trade accounts, a lot of them will let you trade right on here in the Canadian Stock Exchange. So you can get the stock either way. Again, high grade, low cost, thin vein, high grade system. We've seen this very successful silver down in Mexico with Impact. I think Winston could be the analog to that here in the US. In gold, friendly jurisdiction, definitely a potential really good value for you guys. Wanted to share that with you in case you have interest in looking for a near-term gold producer. I want to remind you that a couple of years ago, I did this with Northern Vertex. They were trading about 15, 16 cents a share here in the US. They were a near-term gold producer. They got their mine built. It took them a couple of months to get everything down, but they were producing a brand new mine, whereas Winston has an existing mine. So it took Northern Vertex a little bit longer, but now they're being very, very profitable and doing very well. I see Winston as a fast track version maybe of what you saw with Northern Vertex, something that will come to being profitable sooner, and that would be reflected in their share price sooner than what we saw with Northern Vertex. So again, there's a comparable for you for another mine here in the US that I profiled and went to visit as well in 2018 that's done very well, that's mining gold here in the United States. I think Winston is another option there for you guys looking for a near-term gold miner to get that pop. And when they start producing, get that flat cash flow coming through their income statement, cash flow and balance sheet, and for that price to be bid up by the rest of the investors in the market. So wanted to give that to you guys to take a look at. If you're interested in that, feel free to email me with information. I'd be happy to respond with what I know about the company. Okay, wanted to bring you guys this profile. I think this could be a very exciting company. Until next time, this is Robert Keens with goldsilverpros.com.